Profiting from Legal Insider Trading. For free insider trading reports and a free video course further explaining this material, visit www.insiderslab.com. What insider trading is and why it should matter to you. While everyone may argue about winning stock techniques, there is one thing that virtually everyone can agree on. Those investors with the best information usually win. That said, those with the best information on any given company are the corporate insiders managing, staff, and making decisions for that company on a day-to-day basis. They are obviously privy to information that the rest of us will never have. Of course, this gives them an unfair advantage over the average investor when the insiders are buying and selling their own company shares, so the SEC has them adhere to a strict set of rules. Among other restrictions, insiders are limited to certain trading windows and they must report all of their trades to the SEC in a timely fashion. As we'll soon see, this is all good news for the average investor because those insider trades are all made publicly available. Insiders may not be able to tell you exactly when and how much of their company's stock to buy or sell, but their actions speak volumes. We call these trading signals, and we'll be covering a few of these in this tutorial. Let's jump right in, shall we? Look for open market transactions. Most individuals buy and sell their stocks in the open market. They find the bid and ask price for the shares and execute their trades, all in the open market. But insiders have a number of other methods for acquiring or disposing of stock shares. These methods may include private placement and/or exercise of stock options. Often, these alternative methods allow insiders to buy shares below retail prices or without having to pay any commissions. Therefore, when insiders do decide to buy their company's shares in the open market, they have to make the same risk versus reward calculations individual investors do. They must also figure in the trading costs of paying commissions and buying at their stock's asking price. A decision to buy shares on the open market, regardless of the risk and with the associated costs, is a much stronger trade signal to us. Option-related insider trades. When an insider does exercise his options, he sometimes exercises and sells several lots within a time frame. One of the reasons for doing this might be a shortage of cash to exercise all of his options at once. For example, if shares are trading on the open market for $15 and our insider has options to buy 20,000 shares at $10, he has the potential to make $100,000 immediately. However, to do so would mean paying $200,000 up front, and he may or may not have that much available cash. In this case, he may choose to buy 5,000 shares at a time and use the profit to buy more shares. He would keep doing so until all options have been cashed in. Many may have viewed this piecemeal style of purchasing as a negative indicator of the stock's future prospects, when in fact it wasn't. In our next session, we'll be covering the differences in interpreting insider purchasing versus insider sales. Insiders buying versus selling shares. Welcome to the third installment of Insiders Lab Insider Trading Tutorials. Today we'll be discussing the significance of insiders buying stock versus insiders selling their shares. There are many reasons why an insider would sell their shares. They may need cash for a new home or to pay for their kids' tuition, or they may just want to diversify their investments. However, there is only one reason for an insider to buy stock. They think that the price will rise. Makes sense, right? On the other hand, a major flag for identifying stocks to avoid and possibly consider selling short would be insiders selling their shares after the price has dropped substantially. This is a strong negative signal. Differences in holding percentages. Welcome to the fourth segment of the Insiders Trading course by InsidersLab.com. Today, we'll be discussing the importance of looking for big trades and checking for changes in insiders' holding percentages. Obviously, the more money insiders are trading, the more significant the transaction. When researching a company, it is a good idea to start your research with the largest transaction first. Most insiders are not chairmen with multi-million-dollar bonuses. The average vice president and chief financial officer at a company may make a comfortable living, but a $10,000 trade is still serious money to many of them. The transaction value may look small beside all the others you see on a given day, but it doesn't mean it isn't significant. Likewise, a 5,000 share trade that doubles a vice president's shareholder percentage is more significant than a 5,000 share trade made by a chairman with millions of shares. The 5,000 shares may represent a good deal of the vice president's net worth. Hands-on insider trades. Welcome back to the InsidersLab.com Insiders Trading Training Course. Today we'll be discussing the significance of trading done by hands-on insiders. As a rule, it is more beneficial to focus on transactions by insiders with a hands-on role in the company. Trades by the chairman, president, or chief executive officer, vice president, chief financial officer, or any C-level officer should be given priority. They have the most proprietary knowledge and often have more personally at stake in the trades they make. Though directors generally lack day-to-day responsibility, their transactions should not be completely ignored. They also have access to information about the company's financial condition and strategy. Maybe not to the degree as their hands-on colleagues, but definitely more than the average retail investors. In our next segment, we'll be covering long-time insiders and looking for direct ownership. Long-term insiders and direct ownership. Welcome to another segment of the InsidersLab.com Insider Training Tutorial Series. Today we'll be covering the importance of following long-time insiders and looking for direct ownership. It is important to know the trading history of an insider when judging the relative significance of any insider trading signals. This rule applies particularly to new directors and C-level officers. Insiders with long trading history are more significant than insiders with short trading history within a company. If you can, try to find out when an insider became an insider and grab hold of an insider's history that has at least a few years of data. Another useful tip is to look for direct ownership. Direct ownership means that the shares are actually registered under the insider's name. Generally speaking, insider trades of direct holdings are more significant than indirect ones. It makes sense that individuals are more likely to practice more discretion when the results affect their pocketbooks directly. Look for group trades. Hello and welcome to another installment of the InsidersLab.com Insider Trading Course. Today we'll be covering the topic of group trades. It is always more significant to see a group of insiders trading within a short period of time. Insiders are only human and, believe it or not, they can be wrong. So any activity indicating where there is a consensus among a few insiders should be considered a strong signal. It is logical to assume that the odds of 2, 3, 4, or more insiders being wrong are much less than the odds with just a single insider. That's it for this segment. It was a short one, but important. By the way, if you're enjoying our information, be sure to head on over to InsidersLab.com and sign up for a 14-day trial of our services. For less than 15 cents per day, you can see exactly what is happening on the inside. You'll also gain full access to our suite of research tools, so you may better assess this valuable information. Summary and next steps. Obviously, there is a great deal more to making good investment decisions by monitoring insider trading activity than what we've covered here. However, we hope that you can see the potential of leveraging such data when making your own buying or selling decisions. For free insider trading reports or to try our premium services for only $1.95, please visit InsidersLab.com. Thanks, and we'll see you on the inside.